Good morning, everybody, and happy Wednesday, happy Fed Day, as you guys are saying. Great to be here, and good morning. Get started here in about a minute. Hang tight. Hope you guys can hear me okay. And if you guys have any questions, any stocks you want to look at, please do let us know. Typically, it's actually a good idea to have them before we get started or early on so that I can address them in time. That would be wonderful. Let us know where you guys are located at. We are also, I should mention here before we get started, I'm going to be in New York next week. I don't know if you guys have received the email, but we're doing a meetup on, I believe it's the 27th. It's Thursday, I think around 6 p.m. in Midtown. So if you guys want to join us, we'll talk markets and have some drinks. Would love to have you guys there. So if you're in the tri-state area, or if you happen to be around town, come on down. Love to see you. Very good. All right, cool. Yeah, all you have to do is just email support. It's support@thesteadytrader.com if you want to join us in New York next week on Thursday the 27th, I think at 6 p.m. in Midtown. Again, we'll talk markets, meet in person, and have some drinks. It'll be fun. So make sure to join us if you're around. All right, let's get started. For those of you guys who are here for the first time, Serge Berger here from thesteadytrader.com. What we are going to look at here today is our top things on our screens. Obviously, this morning we have today I should say, we have the Fed meeting, so we'll talk about that real quick, what that means and sort of preparation for that from a trading perspective. I want to talk a little bit about NVIDIA, what happened yesterday, and then I want to look at some energy stocks which are giving us more constructive signals. And I actually want to start off with something that probably 0% of you give a flying shit about, which is the Turkish lira. But we'll start there because it kind of shows us what's going on. So if you've never looked at this is the kind of stuff that I was on three institutional calls this morning already, and this is the number one conversation that's being having out there by professional investors this morning. And what you're looking at here is the Turkish lira. Now I realize that most of you don't care about this. You don't even probably know where Turkey is, and I don't mean this disrespectfully, you just don't care, and I get it, right? It may not matter that much, but it matters to your portfolio, it matters in the markets, okay? So the reason why it's important is because when you look at something like the Turkish lira, and you look at, basically it's something where there's going to be opportunity at some point, not in the currency necessarily, but in things around it. So I'm going to continue my research calls on this little bit later on than tomorrow. But basically what happened in Turkey is that Erdogan, which is the president, he basically had one of his main political opponents arrested, the emerging markets kind of stuff. And so that's causing a problem. It's causing a huge spike in the dollar versus the lira. So what you're looking at here is the Turkish lira getting weaker. Now, again, I realize most of you couldn't care any possibly less about this. What I'm trying to tell you is that now that the Max 7 trade is no longer going to carry the S&P 500 at 25-15% a year, the money is going elsewhere, and there's a ton of opportunity. So I don't have a specific trade for you on this, but it's something you definitely want to keep an eye out for, because there will be follow-on opportunities on this at some point. I'll figure it out. We haven't really come up with any magical conclusions. I think the currency itself is a bit weird here to be involved, because it can get very jerky if you look back at, and again, I realize, this is not something that's on a lot of people's radar, but back in late 21, I remember watching this very closely, and then we have one of those knee-jerk reactions where the Turkish lira got very weak, and then it rallied very strongly. This is so it's the inverse here. It's versus the dollar. So this is the dollar getting weaker or stronger. So it's the inverse if you were to do the cross pair in inverse. So anyway, don't want to waste a lot of time on it. I realize again most people on the retail side couldn't care less, but it will obviously provide some opportunity at some point down the road. So we're watching it. FYI. Quickly, just on the S&P 500, what we saw yesterday was just a continued lack of being able to get off the mat. I still think it's possible that we get a further oversold rally here. I think a simple and logical level is somewhere around the lows, the 580 level on the SPY. It's the level that we talked about all the way since the Fed meeting of last year in December, all the way through once it finally started breaking. We said, hey, listen, 580 is the level to watch. Once we break below there, we can cascade, and that's exactly what happened. So now in very simple terms, an oversold bounce back into that area could be interesting to watch. So that's something that I'm watching quite closely. Again, what we're not seeing yet is any real follow through. So if you look at, for example, yesterday's price action intraday, I'll just quickly bring up let's say the NASDAQ 100. And so this is yesterday's move in the NASDAQ 100, and you can see that we just the afternoon session just couldn't get us anywhere. So by the way, I'll explain to you what these two boxes are. If you are a Trade Ops channel member, I'll post this chart as soon as we are done here. But basically, this is the afternoon session here yesterday afternoon in the Qs, and we just did nothing. It was just nothing but sideways action. And to me, it was a little bit interesting as I was talking to JB about it earlier this morning on our morning call, and to several other people early this morning on our calls. It's a little weird because you would have thought with the headlines we had yesterday that there would be a more meaningful reaction in one direction or another. I just don't think the Fed meeting today is that important. I'm open-minded to whatever happens today. I just don't think it's that important. But again, that doesn't mean the market can't react. The market's looking for an excuse to do something, whether it's to the upside and a further oversold bounce or to the downside. I don't know. I think the odds are higher that we see an oversold bounce, but clearly it needs some sort of a trigger, and I don't know what it is. What I can tell you is that today, once we have the Fed meeting passed, in the rearview mirror, what's going to happen is a lot of hedges that people put on are going to expire today, because a lot of people hedge for like known unknown events, like a Fed meeting today, and so that will then make it at the margin easier, as I said yesterday, for the equity market to potentially bounce. So I need to see the price action dictate this at this point, but that's kind of what we're looking for, right? I still think there's more bounce. I would tread lightly here right now until we have a clear idea on the indices, but I think the path of least resistance is a bounce for now. So let's just see what plays out, and then we'll have a better update on this tomorrow. Now, let's quickly talk about NVIDIA. And I've talked about this now for quite some time, and I'll share you guys a chart with you guys that very clearly shows what continues to happen. And that's essentially this sort of, out of Max 7 and into other stuff. So this is one way of looking at it. I see some of you guys are looking in, German defense stocks. Like those stocks have rallied a lot. Doug, I'm not quite sure I need to chase them here. We've talked about them for a month and a half maybe, so I'm not quite sure now is the time to get in. But what's very clearly happened is that, and again, we've talked about this for like probably a year or more now, that at some point the Max 7 trade will unwind. And it's not about people bringing their allocation down to zero, as I keep saying. It's about there's so much darn money in those names that people have been looking for and finally found an excuse to diversify out of those names, and it's going pretty much anywhere else. It's going into It's going into European stocks. It's going into Asia, China. You guys go watch our podcast that I've had on China. It's here in the YouTube channel. Go check them out. We're literally I'm at the point of like exhaustion of trying to explain this to people, and we've been saying this for like 9 months to 12 months. Really, anyone really cared the tiniest bit? All they want to hear about is Nvidia. Well, I'll talk about Nvidia in a minute more. But that trade from a market leading perspective is probably over, right? And that's a very different thing than to say that Nvidia can't rally ever anymore. That is absolutely not what I'm saying. I think it will rally again at some point, but it hasn't done nothing since May of last year. And a lot of people that are permabulls refuse to acknowledge that, right? And so there's huge bull markets elsewhere. There's huge bull markets in Berkshire Hathaway, right? Look at this. You can see exactly where the money's going and where it's coming out of. It's coming out of Max 7, out of growth QQQ, into Europe, into Asia, into gold miners, silvers, even copper and energy stocks are waking up now, which I want to get to here a little bit right now, okay? So that's what's happening there. Now, quickly from a performance perspective, I want to slowly walk over to the energy trade, which I see some people asking as well, and that's great. So what you're looking at here is a performance chart of this is just simple S&P 500 sectors, right? The world is much bigger than the S&P 500 sectors, but let's start here because you can kind of see where we're getting at. So this is the XLE ETF that you're looking at there. And what it is showing us that it's performing, it's outperforming and leading the S&P 500 sectors this year, along with healthcare. In fact, it's beating technology by, this is huge. I don't think people can appreciate how big this is. Like 1,500 basis points, so 15%, right? That's huge to understand. And it's not just year to date; it's also over the past month and literally over the past few days, right? So energy is basically, this is the 5-day chart that I would like to make everyone aware of. And so make sure you take note of this and see what might be happening there, right? So if you are investors that are still, all they're looking at is their Max 7 stocks and a few AI-related names, are completely missing huge bull markets in many, many other places, right? What they're doing is they're hoping and praying that the names that they're overloaded on, which is their fault, right, are going to bounce back just as strongly. And I think the V-shaped reversal back to fresh all-time highs in a nanosecond, I think that trade is over, right? And so the sooner one realizes that, and the sooner we become nimble about this, and we find and we allocate to where the bull markets are, the more we can make money. So I'm holding a special session in, I think it's at noon. Hold on, let me see what time it is. I think it's at, let me quickly check what time it is. I believe it's at, and I'd love for you guys to join because we're going to walk you through exactly how we find all this stuff. And then I want to get to you guys' questions as well. So let me just quickly check something here to make sure I find the link for you guys as well. So here we are. Here's this, and the link to that is here. Okay, so that webinar today, or that discussion is at, I'm just bringing it up, sorry. It's at 1 p.m. Eastern today, so that's 10 o'clock Pacific. And I'm going to quickly drop you guys the link in the chat right now. And what we're going to do today, thank you, Joel, I appreciate it. It's 1 p.m. I just put the link inside of the little chat thing here. You guys can join. And I'm going to just show you guys right now what's happening. So someone was asking before, Nicholas is asking, what about energy stocks? So what we're seeing right now is we're seeing an improving case in an emerging bull market in energy stocks. It's a big story. I don't have time right now to go through this, but I'm going to show you guys at 1 o'clock Eastern, 10 a.m. Pacific, how specifically find this. So for example, this morning on our market rover, we're having a new buy signal in Chevron. We're having a new buy signal, and you can see the profit targets right there, target 1 and 2. And one can use call options, of course, as well. We have a new buy signal in Hess. We have a new buy signal in ExxonMobil. We have a new buy signal in KMI, which is Kinder Morgan, right? And so this very much reflects what we're seeing here, but now these things are emerging, right? So I would encourage everyone to join us there. Also, and I'll get to some of the other questions. I think someone was asking about Pfizer before, right? And then we'll look at NVIDIA. But also what we're seeing is just these massive bull markets continuing in, gold mining stocks, gold, silver, and, this is all, it's nothing new. Like gold mining stocks, we've had them in a bullish trend since basically mid-January. They were up like 22% year to date. Like which one of you Max 7 stocks is up 22% year to date? None of them. They're all down about that much, right? So the sooner investors can wake up and understand that money is shifting in a huge way, like I showed you before, and you give up the hopes of NVIDIA going back to fresh all-time highs by this afternoon, right? The sooner you can start making money. But a lot of people right now, when we talk to a lot of people, are stuck in, they're kind of paralyzed. And you may find yourself in that situation. I don't know, obviously, you guys individually too much, but the quicker you can realize that there are other markets to be bullish on, right? It's about respecting when trends change. So, for example, if you look at NVIDIA here quickly, okay, then what you'll see is that NVIDIA is actually no longer in a bullish trend, okay? So this is our trend following tool. It's called the Market Rover. And again, we're going to go through and show you exactly how this works. So NVIDIA is actually now, for the first time for more than a couple days, since 2023, no longer in a bullish trend. That does not mean the stock can't bounce a little bit here and there. It's just not in a bullish trend, right? However, gold and gold miners and silver and some energy stocks and material stocks are really getting going, right? And of course, we know about European stocks. A lot of our listeners and our followers, I should say, have been long Germany because of these signals, right? So the latest one, for example, came on the 16th of January. The EWG ETF since then is up and still trailing up 20%. So, that's the kind of stuff we need to understand. So please join us at 1 o'clock today. That would be awesome. Is XLE a buy? I don't think the XLE ETF as a whole is a buy yet. On our Market Rover, it's still choppy. It's not in a sustainable bullish trend yet, but individual stocks within that sector are looking better and better and better. So that's why I just showed you this morning, we're having new buy signals in Hess. That's an energy stock, right? We're having a new buy signals in Kinder Morgan, right? And you can see the upside targets there. So the sooner investors wake up and realize that they have to be nimble and open-minded. Remember, we've been talking about this being the year of the trader all year. And I think more and more people are waking up to that fact now, because the fact is also very much that when you look at the world and you look at the world equity indices, you can very clearly see that the S&P is basically, butt naked last, along with maybe the NASDAQ, and pretty much everything else is up. Right, and that is not a fun situation to be in, but it's a normal situation to consider, because at some point money comes out of these things that are so heavily overallocated. So there's a ton of money to be made. I'm heavily relying upon these changes in sectors, groups, and individual stocks in this. Like, for example, another stock that is just an absolute train wreck right now, and we had a huge trend change taking place last year when everyone on CNBC was talking about how amazing this is Novo Nordisk. Right? This happens to be a European stock. It's an ADR, of course. NVO is a ticker symbol. And you can see we had a huge bullish run, but that bullish run ended in September of last year when everyone on CNBC was talking about how amazing this company is. And then it became bearish trend, and since then the stock is down to like 28 or 30%. Right? So this is the kind of stuff we're talking about. Last but not least, let's quickly go to NVIDIA a little bit more. So NVIDIA right now is in a neutral trend for the first time for more than a couple days since basically 2023. We had a huge rally. The stock had trades along the way. That's those little buy arrows you see. The stock was up as much as 600%, and finally we're done with that trend when it broke 115, right? The sooner a trader and investor, and I'm assuming many of you guys are somewhat self-directed, at least in part, otherwise you wouldn't be here, you follow the markets, the sooner you start to respecting trends and trend changes, right? Whether whether they're breaking from bullish to neutral or bullish to bearish, or from bearish to bullish, like is happening in many, many places, the sooner you stop listening to narratives and guys in leather jackets dancing, prancing around on stages, hawking up chips like yesterday, right? Those are great companies, but there's a huge difference between a great company and the flows. If everyone is overly allocated to a stock and there's no more incremental buyers to something, the trade is over, at least for some time, right? And that's what I'm trying to sort of bring across here. Hopefully this is helpful. And I'm not trying to trigger anyone. I want to be clear. I see that it takes the retail investor a long time to come to certain realizations because the narratives on Twitter and TV change so slowly that typically they change way too late. Not always, but a lot of them. So quickly, just a near-term look at NVIDIA. Now, when you look at NVIDIA this morning, it's up a little bit. I think it's up about 1%. That's a rounding error, basically. But if you look at NVIDIA just in the near term, again, it's broken its trend. That's what we see here. But what you're really looking at when you look at NVIDIA is a trading range. And I think, very much like we had the S&P 500 trading range that I talked about earlier this year until it finally broke, the trading range in NVIDIA is about this, right? So it's roughly about, 150 on the upside-ish to roughly about, let's call it 100 in the downside. So it's about a 50-point trading range. Anything in here in the middle is noise, given the stock's volatility. So again, the sooner investors and traders realize that trends are changing, and you have a process for processing this, the easier, and I say easier, nothing's easy in life for the most part, the easier trading and investing becomes, right? The more fluid we can be, respecting new trends when they start and when they end, the better we're off. So make sure you join us today at 1:00. The link is in the chat box, and we'll see you guys in the trade ops rooms here in just a couple minutes. We'll see if there's a trade to do. Again, we have the Fed meeting, of course, later on today, and also we'll be back here tomorrow morning as well. But please join us at 1:00 Eastern here today, 10 a.m. Pacific. See you in a bit, and thanks for being here. Also, please thumbs up, like on the video, and subscribe. That helps us to be able to continue to do this morning show. Thanks for being here. See you guys soon.